this is Joe from Joe's Reproduction. I hope you're doing fine. If you're new to my channel, make sure you subscribe so that each time I post a new video, you might be notified. Today we're going to be looking at the answers of accounts paper 2 of 2016, and specifically we're going to look at question 1C, and this question deals with the trial balance. But before we take a look at the question, I'm just going to announce that my online tuitions will be resuming, and the online tuitions, they only go at 100 kwacha per subject, and that's monthly. I'll be providing the following subjects: mathematics, physics, chemistry, biology, and accounts. And registration, it's only free. That means if you want to join the WhatsApp group, you join for free, and you're only going to be required to pay immediately we start or immediately I resume the online tuitions. So let us take a look at the question. So question 1C reads: S. Msongo is a sole trader and the following transactions were extracted from his books on 31st December 2014. So as you can see, we have those transactions. The question proceeds: the given transactions took place after the extraction of the above trial balance. So they took place on 31st December. The first transaction, we have bought goods by check amounting to 90 kwacha, bought goods on credit amounting to 500 kwacha, sold goods by check amounting to 700 kwacha, paid cash for repairs amounting to 50 kwacha, cash sales amounting to 240 kwacha, received a check from S. Simba, a debtor, amounting to 520 kwacha. So we're going to start with the first transaction, bought goods by check. And from this, we need to identify two types of accounts which are affected. And the two types of accounts which are affected, we're going to have purchases and bank. Since the sole trader bought goods, that means we're going to have purchases, and since he bought by check, that means we're going to have the bank account. So that's going to be the first thing. So we are going to have the purchases. The purchases account. We're also going to have the bank account. Let us take a look at the trial balance that we have been given. In the trial balance that we have been given, the purchases and the bank, we can find them. That means we have some balances. So the balance of purchases is 6860, and the balance of bank is 1620. So we're going to say the balance of our purchases there, we have 6860. Then the balance for bank there, for bank we have 1620. And let us look at the transaction. The transaction amounted to 90 kwacha. So bought goods by check amounting to 90 kwacha. So which means in the purchases account there, we're going to say bank. And since the sole trader bought the goods, that means that the goods were brought into the business, and we're going to record that to the debit side. So 90 kwacha there. And in the bank account there, we're going to record on the credit side, since the sole trader was paying out for the goods. So we're going to say purchases of 90 kwacha. Let us take a look at another transaction. Another transaction reads: bought goods on credit amounting to 500 kwacha. So the two accounts that are going to be affected, we're going to have purchases and the creditors account. So we're going to have purchases and the creditors account. But if we take a look at the transactions that have been given in the trial balance, we don't have the creditors. So which means we're not going to have any balance for the creditors. So we're going to have the creditors account there. So I've said two types of accounts that are going to be affected. We're going to have the purchases and the creditors account. So in the creditors account there, we're going to record the purchases. And since we bought from the creditor, that means the creditor was giving out the goods, and you're going to record that on the credit side, 500, and let us record that in the purchases account. So we have our purchases account there. Since the sole trader bought the goods, so we are going to say creditor with 500, and we're going to debit that amount. Let us take a look at another transaction. Another transaction reads sold goods by check amounting to 700. So sold goods by check. The two types of accounts that are going to be affected there, we're going to have the bank account. We're also going to have the sales account. And if we take a look at the information that we have been given, the sales, we have been given the sales there as 13,400. So which means we have the balance for sales. So sold goods by check, that means the sole trader was receiving 700. So we're going to say sales, and we're going to record that in the bank account to the debit side, 700. Write down the sales account, and we know that we have a balance in the sales account, and this balance is given as 13,400. 13,400, and I said that two types of accounts that were affected, we had bank and sales. So we're going to say bank, and this is going to be recorded on the credit side since the goods were bought from the business. Since the goods were sold by the business. Let us take a look at another transaction, paid cash for repairs. So the two types of accounts that are going to be affected there, we're going to have the cash account and the repairs. So let us look at the information if you have been given the cash and the repairs there. As you can see, the cash we have been given as 120, but we don't have the repairs account. So which means we need to add another account there for repairs. So the balance for cash there, it's 120. So we're going to have the repairs account and the cash account. So the sole trader paid for repairs amounting to 50 kwacha by cash. So in the repairs account there, we're going to record cash. He paid by cash. That's going to be on the debit side. Since expenses have the debit side, then since he paid by cash, that means money was going out of the business, and we're going to record that on the credit side. But before we do that, we're supposed to write down our balance, and our balance that we had in the cash was 120, and we're going to say repairs. Since the repairs were paid out, this means that money was going out of the business, and that's going to be 50 on the credit side. Let us look at another transaction. Another transaction reads cash sales amounting to 240 kwacha. So cash sales amounting to 240 kwacha, and the two types of accounts here that are going to be affected, we're going to have cash and sales, so amounting to 240. So cash there, we're going to say sales. Since the sole trader sold the goods, that means that he was receiving the money, and he was receiving the money through cash, so which means we're going to debit that amount, so 240, and you're going to credit 240 in the sales account. So in the sales account there, we're going to say cash, and you're going to credit that amount, which is 240. Let us look at another transaction. Another transaction reads received a check from S Simba A data. Received a check from S Simba A data. That means that the two accounts that are going to be affected there, we're going to have the bank account and the debtors account. And for the debtors account, we have been given something. We have something there, debtors amounting to 4,220. So we're going to write down our debtors account, and the balance we have been given as 4,220, and one of the debtors for the sole trader paid out, and his name was S Simba. That means that we're supposed to reduce this balance, and the debtor paid by check, so we're going to say bank, and we're going to credit that amount. So he paid 520. So we're going to say debtor there. Since the debtor paid the business, the sole trader, that means that we're going to record that to the debit side. And as you can see, we are done with the transactions that we are given on 31st December. That means we can write down our trial balance. But before we write down our balance, let us just balance up our transactions. So for the purchases account there, we're going to add the debit side. The debit side there is going to be 7,450, and we're going to record that on both sides. And to balance up that with the credit side, we're going to add 7,450 as our balance carried down. Our balance brought down will be 7,450 on the debit side. Let us balance up the bank account. For the bank account, we're going to add the debit side and the credit side, and the amount which is going to be large, we're going to record it as our total, and there we're going to find 1,710 as our totals there. Then if we subtract 1,710 minus 700 and 520, we're going to have 490 as our balance carried down on the debit side. And if this is brought down, we're going to have the balance brought down on the credit side as 490. Let us balance up for the creditors account. So for the creditors account, we only have one figure there, so that's going to be easy. So 500 there, 500, and we're going to write down our 500 as our balance carried down on the debit side. And if it is brought down there, it's going to be on the credit side. Let us balance up for the sales account. So for the sales account, we don't have anything on the debit side, but we have all the numbers on the credit side. So adding up these numbers there, our total is going to be 14,340. We're going to have 14,340. Balancing up that means that our balance carried down is going to be on the debit side, and we're going to have 14,340. So we have 14,340 as our balance brought down on the credit side. Let us balance up for the repairs account. So we only have one amount there, and that's simple. Then for the cash account there, we have 120 plus 240 on the debit side, and we only have 50 on the credit side. So the amount here on the debit side is going to be large. So we're going to say 240 plus 120 there. The answer is 360, and we're going to record that on both sides. And we're going to say 360 minus 50 to find our balance carried down, and that's going to be 310 on the credit side. And if it is brought down there, our balance brought down is going to be 310 on the debit side. Let us balance up our last account there. So let us compare 4,220 and 520. So the large number there, it's 4,220, and we're going to record that on both sides. Then we're going to say 4,220 minus 520 there. We're going to have 3,700. So we're going to have 3,700, and that means that we have balanced up our accounts. So the only thing that we're going to do is to get our balance breakdown for each account there. So just take note of all the balance breakdown that we have found. So let me start with the first one. So for the first one, the purchases account, our balance breakdown is on the debit side, and we have 7,450. For bank there, our balance breakdown, we have 490 on the credit side. Let us look at other accounts. For the creditors account there, we have 500 on the credit side. Then for the sales account, we have 14,340 as our balance breakdown on the credit side. Then for the repairs account, we have our balance brought down as 50 on the debit side. Then for the cash account, our balance breakdown, we have 310 on the debit side. And for the debtors account there, we have 3,700 as our balance breakdown on the debit side. So let us go back to the question. So as you can see, we have recorded everything that took place on 31st December. So we can start by writing down the updated trial balance. But before we do that, let us just write down our balance breakdown. So for purchases, we had calculated as 7,450, and this had a debit balance. Then we also had bank, and bank we had a balance of 490, and that had a credit balance. Then we also had creditors, and that had 500 and it had a credit balance. Then we also had repairs, and repairs had a balance of 50, and that was on the debit side. Then we also had cash there had the balance of 310, and it was on the debit side. Then we also had debtors, and that had the balance of 3,700, and that was on the debit side. Then we also had sales, and for sales the balance there was 14,340, and that had the credit balance. And we can start with our first transaction. So we have capital we have been given as 4480, and capital was not affected, so we are going to record that the way it is. So we're going to say capital on the credit side as 4480. Then we're going to go to salaries. Salaries there have been given as 3,540. So we have 3,540, and that was not affected. So it's going to be written the way it is. So 3,540 3,540. Then we have debtors. For the debtors there, it was affected, so we are not going to get this amount. We're going to get our updated amount, and the amount that we're going to get 3,700, this amount, and it had the balance on the debit side. So that's going to be 3,700. Then we have purchases. Purchases was also affected, and our updated purchases is 7,450, and it had a debit balance. So 7,450 purchases. $7,450. Then we have sales. Sales was also affected on 31st December. That means we need to get the updated figure, and the updated figure there we have 14,340, and that had a credit balance. So we have sales, and that had a credit balance. So we have 14,340. Then we have drawings which amounted to 1920, and drawings was not affected, so it's going to be recorded the way it is. Drawings 1920. Then we have bank, and bank was affected on 31st December, and that means we need to get the updated figure, and the updated figure we have 490 on the credit side. So bank 490 on the debit side, on the credit side, sorry. Then we have cash. Cash was also affected on 31st December, and that means we need to get the updated amount, which is 310, and that at the debit balance. So cash 310, cash 310. Then we have stock. Stock amounted to 1680, and stock was not affected, so we're going to record 1680. Then we have buildings. Buildings was not affected, that amounted to 720. Then we also have sundry expenses, which amounted to 440, and that was not affected. Amounted to 440. As we can see, we have finished all the transactions that were given to us in this trial balance, but we have other transactions that we are remaining with, like that of creditors and that of repairs. So we need to record these two transactions in the updated trial balance. So creditors of 500 and repairs of 50. So we're going to say creditors of 500, and that had a credit balance, and repairs of 50, and that had a debit balance. And there, if you add your debit and your credit, the answer must be the same. So we're going to add 3,540 plus 3,700 plus 7,450 plus 1,920 plus 310, then plus 1,680 plus 720 plus 440 plus 50, and the answer there it's 19,810. And if we add the credit side, so if we add 4,480 plus 14,340 plus 490 plus 500, we are also going to have 19,810. And as you can see here, we have the same answer. That means that our trial balance has balanced. I hope you have enjoyed the solutions of question 1C. So don't forget to like and share this video with your friends. Also make sure you support us through our services that we provide. We sell some past papers with answers. We sell some books, both soft copy and hard copy. We provide online tuitions. We also sell some full topics videos. We also provide photo and video shootings. So if you want to check the prices of everything that I've mentioned, you can check in the description box of this video. I'll meet you next time, and God bless. Thank you.